Our team makes unemotional mathematical decisions that are based on our clients' financial plans. And that is a well thought out portfolio and investment strategy. Getting nervous about what China is doing or Mexico or Canada or Europe is not an investment strategy.
Right. That's right.
not.
That's exactly right.
Panic selling, getting, like you said, getting bearish or bullish is not an investment strategy.
Welcome to Upticks with Jake Falcon, founder and CEO of Falcon Wealth Advisors. In this podcast, we help high net worth individuals overcome financial complexities. We do this by enhancing financial literacy and discussing topics in a language free from industry jargon. Now, on to the show.
Welcome back to Upticks with Jake and Cory. Cory, welcome back to the show.
Hello, Jake. Thank you for having me back.
All right, Cory, I got one for you. Well, I got three things we're going to do. I got a soapbox I want to start off with the show.
All right.
Then we got a big topic today. We're going to talk all things stock markets. It's a very important episode. And then I've got a good tip for our viewers, so make sure to tune in till the end. I've got a tip on ways to protect yourself from identity theft, which is a very powerful tip. You ready for my soapbox? You ready for my soapbox?
Please, fire away. What you got?
I want to call, how about this word, malarkey, shenanigans on anybody that, I want to hear people that actually like traveling. All right. I just got back from a wonderful vacation with my wife, Rachel, in Costa Rica. Mm-hmm. We stayed at an amazing resort. Everything was fantastic, Cory. However, you know what? And I was talking to my dad about this. You know what? There's nothing better, though, than your house.
Yeah, that's true.
There is no bed in the world that I like better than my own bed. There is no shower in the world that I like better than my own shower, Cory, or bathroom, period. Or food, period.
All right.
Full stop. So I just challenge the people that say they love cramming their stuff in a tiny suitcase, hoping that they packed everything, waiting around in airports, being around sick people or weird people, dealing with delays.
Yeah.
For what? To go sleep in a bed that's not as nice as your bed? My point is, here's my point.
All right, let's hear it.
Because the most common thing I hear from clients, Cory, is what they want to do in retirement is travel. Most times we'll allocate 5, 10, 20, whatever, 30, whatever it is, $30,000 a year to travel. My challenge is, what if you took that travel budget, let's say it's $15,000 a year, and you decided to make your home $15,000 a year better? Right?
Yep.
You bought the nicest bedroom set you could buy. You redid your bathroom one year. You put in a swimming pool. I know swimming pools cost more than $15,000, but my point is, I don't know. Maybe I sound a crotchety guy. I was joking with
a little bit.
I was joking with my executive assistant, Catalina. I said, cancel all my trips.
It's over. No more travel.
Cancel them all.
I will jump to your defense, though, Jake, on this subject, because you have always been this way. We've worked together 15 years. Believe it or not, it's in like 5 days, Jake, is when we started working together 15 years ago, which is kind of crazy. It was this month, March 2010.
Happy anniversary, Cory. Welcome to
Thank you. You have always been that way. So I will give you credit where it's due there.
A really good friend of mine. He's a very good friend. He was in my wedding. We were single. Hanging out. And I was like, what are you doing next week or weekend or whatever? What do you got going on? He's like, I'm going on vacation. And I laughed at him. I was like, you're going on vacation?
Yeah.
Why? I was like, what are you running from? That's what I told him. I said, what are you running from? I don't think he knew what to say. I don't think he knew what to, and I'll never forget that conversation we had. Hopefully he's listening to this episode because he laughed.
I hope so too.
When I was single, I never took vacations when I was single. Again, I love my wife, Cory. I could be with my wife anywhere in the world, including our home, and be just as happy. Maybe I'm weird. I don't know. I don't need to go to Costa Rica to have fun and relax and be happy. I could do that right here.
Did you have fun? Did you relax? And were you happy?
Yes.
Good.
I had a wonderful time with Rachel. We had a great time. She read, Cory, I think she read like 7 or 8 books on this trip.
I believe it.
And I read 2 to her 7 or 8, but We read, we relaxed, we ate good food. But I don't need to go to Costa Rica to do that is my argument. And I will go on vacations with Rachel. I'll continue to do it. It's not for me. I don't like it. I don't like it. There's no place like home. Me and Dorothy, there's just no place like home, Corey.
That's right. Tap those slippers together, Jake. All right.
So I'm just challenged. The next client I meet with, the next potential client tells me travel, just know that's coming. I'm gonna be like, what do you like about it?
What are you escaping from?
What are you running from?
I think the idea of travel, like I love spending time on the beach, but I don't like traveling there and traveling back and everything else involved. So I think that's a big part of it. But you bring up an interesting point, the other side to the argument that is not discussed very often. Yes. Which I don't disagree with.
The pain that you have to go through to get to that beach. We're not beach people. We're not beach people. You know, I don't want you to move, but if I liked the beach that much, I would move to a beach and I would live on a beach or near a beach. That's what I would do. I don't like the beach. That's why I live in the middle of the country. I don't care about a beach. I don't need
All right. Yeah, you heard it here. No beaches, no vacations. Jake likes to travel, likes financial planning and investment management, and reading books, which is good, Jake. As your business partner, I fully support all that.
I like to work.
That's right.
I love Kansas City. How about that? Let's talk some positive. I love Kansas City. I love my house. I
love those 70-mile-an-hour gusts and snowstorms.
I love my house. I love my office. I love my wife. I love my dog.
Good.
That's all I need. I got everything I need right here.
Perfect. Anyway. I love it.
All right. You got anything new you want to share? That's my soapbox right now.
No, let's get into it.
All right, Corey. The market has been rattled by geopolitical events. We still have some ongoing wars. We've got tariffs. We've got policy changes. And you're seeing dramatic volatility in the stock market. So today's topic is it time to get bearish? Is it time to sell and hide? What are your thoughts?
Do you think getting bearish and selling and hiding are the same thing?
Yes.
Okay. All right.
What do you think?
No, I don't. Okay. I think that but to answer your question, no, I do not think this is the time. I think the time to do that is when.
Hold on. So if we disagree, we got to talk about it. So
okay, good.
I think bearish is selling because if by the way, for our audience, if you don't know what bearish means, bearish is just a stock, a Wall Street jargon term. Bulls are typically like the market's going up, and a bear, the market is going down. So my point is, if you're a bear, you think the market's going to go down. My point was you would sell. You wouldn't be in the market. What is your counter to that?
My counter to that is not getting bearish or bullish and staying more neutral and recognizing that the market's going to do what it's going to do. Like there's going to be times where things are good and times where things are bad. But I think trying to predict that, of course, is difficult. My bigger point though, Jake, is that like if
you said bearish was not selling though. So what is bearish? So you're saying just don't be bearish.
Yeah, exactly. I'm just saying, don't have the expectation that things are going to go great or horribly because you don't know. And if your portfolio and plan are structured properly, it shouldn't matter.
Well, yes.
But I get the point and I get the question because I see it, right? I've got a brain and eyes and ears and see what happens. And I understand why people get concerned. But I do find it fascinating that it's like the time to sell everything and hide was a few months ago when everybody is all giddy about how great the market's going to do from this point forward. And I hope, if nothing else, that sort of stresses the point that what our expectations are and what actually happens can be drastically different. So if we set our expectations, recognizing that the future is not so predictable and that whether we think the market is going to go up or down doesn't really matter whether it goes up or down, but recognizing it's almost like telling ourselves the story that we're going to let go of trying to time when to get in or out of the market. Because at the end of the day, that's what we're talking about here, right?
Yeah, and that's good. And I'm glad you said that because we're getting into the psychology of it first. I do want to get into the data though also. So, good. But the psychology, and I've been saying this for the majority of my career, that the market goes down. The numbers might be a little off because they change every year, the averages. But on average, the market will go down 10% every year, 20% every 3 years, and 30% every 5 years. So if we know that before we invest a penny, why psychologically, Corey, are humans rattled every time the market goes down? Why does that happen? You think it's the same thing as you're behind you and me? We get rattled when it snows. We
Mhm.
live in the Midwest. It's going to snow here.
Yep.
It's going to snow every year. I mean, not every year, but it probably is. Just like the market's probably going to go down. What's crazy, Corey, and not crazy, but it's just human nature, is that stocks go down, inevitably people start to panic. And I like what you said is like, you have to stay neutral. We have to know that's part of the game.
Yes.
You're not
No
going to
pain,
make,
no gain. It's
yeah, you're
true.
not going to make money if you don't risk money. Right.
That's right.
And I've got a great client. I got a great story here. We just dealt
Please,
with this.
let's hear it.
I got a great client, she's retired, and she gets concerned. She gets nervous. She's a nice lady. She's an older lady. She's nice, but almost every time the market rattles or she watches something on TV, not
Mm,
every time, but she gets
often.
concerned. And so what it boils down to though is that we need to talk, like, people need to understand money you have in stocks is money you shouldn't need today or tomorrow or next year. In fact, you shouldn't need that money that you have in stocks for 5, 10, 20 years. So the value of those stocks as it fluctuates day to day should not impact your emotional behavior or status. But it
Mm,
does. And so my
it
point is,
does.
I don't want to say it's her fault for getting rattled. My job as her wealth advisor is to remind her of that. That's it. Is to remind her that, look, I get it. It's scary. Things are changing. I haven't said the word tariffs this much in a decade.
Right.
So, but here we are. This is the new normal. I don't know, new normal. This is the current state. And you know
There you
what?
go.
Next year, Corey, there's going to be a new thing. And you know what? The year after that, there's going to be something else. It's not a new normal because it's never normal,
That's right.
but it's going to be new. And we're going to have pullbacks. We're going to have crashes. We're going to have wars. We're going to have corruption. We're going to have fraud.
Yep.
It's just part of the human condition. And so the key is you want to be invested in companies where you know the story or your advisor knows the story. And hopefully those companies can pivot and adapt and make changes as those
The environment does.
geopolitical changes does. Yeah, what are your thoughts on that?
Yeah, that's really good. That we are obviously aligned on a lot of what we're talking about here today, though, Jake. But I do think that the challenge I would have, back to the point you made about money that's invested in stocks and when you need it, is I would challenge, if someone's retired or retiring soon, to evaluate how many years of their planned distributions from their accounts are not invested in the stock market today. And the
That's
reason I think
good.
that's important is because my experience is that when somebody can understand that, all right, the money that's invested in stocks, I really am not going to need that money for 5 years or for 10 years. It does take the concern out of the day-to-day nature of what happens in the market. And in my experience, it can also help open people's eyes to the idea that when things get dicey is when there's opportunity to not get so scared of volatility, but to take advantage of it.
Right. And that's what our management group does for our clients.
Yes.
That's what we train them to do. That's what they were hired to do. And hopefully our clients understand that's what they're paying us to do, is that when there's an opportunity in the marketplace because of mispricing, overreaction, our traders will go in there and they'll buy companies that are mispriced, hopefully, with the
Mhm.
intention that those shares will recover and go up in value. Now, they don't get it right every time. That's impossible. But
Right.
our team makes unemotional mathematical decisions that are based on our clients' financial plans. And that is a well thought out portfolio and investment strategy. Getting nervous about what China is doing or Mexico or Canada or Europe is not an investment strategy.
Right. That's
That's
right.
not.
That's exactly right.
Panic
Yeah.
selling, getting, like you said, getting bearish or bullish is not an investment strategy. And this, I got a
Right.
little thing that irks me. I get so sick of all these analysts on TV.
Yeah.
I'm
That are
reading, I'm
always
listening.
wrong,
Yes, I'm listening to this book, in
often
The
wrong.
Intelligent Investor.
Yeah.
Really good right now, but he goes off on how these people are just full of it.
Yeah.
They're all so wrong and stupid, and like it's unbelievable how much weight and responsibility they hold and people still get suckered by it all the time.
And there's no accountability.
No accountability. You're right. They're wrong tomorrow, wrong today, and back on air tomorrow.
Yep. Yeah, that's right. And that is, I'm glad that you said that, Jake, because I would also make the comment that as of our recording of this episode, we just went back the last few months and scanned the coverage of CNBC or Bloomberg. And I'm not calling anyone out specifically. I'm just talking about the financial networks. If we went and scanned the coverage of those and the companies that they talked about the most the last few months, Jakes, I would be confident speculating that those are the companies that have gotten beat up the most during what we've seen and experienced here in the market the last couple of weeks or last month or so. And the reason I think this is important to understand is that you do want to understand what you own and why you own it. And if you bought crypto or whatever the hot stock was at its peak price and it's pulled way back from that, maybe this is a good opportunity to learn a lesson. That you need to understand what price you're paying for what you own and whether you're buying something because it's going up or because you actually understand the value in it.
Yes. Good one, Cory. That's right. And that's the key too, is to stay diversified because again, we don't get bearish or bullish. I'll give you my market outlook. The market is going to be volatile. And my best guess, Cory, is it's going to go up over time. That's it. That's it. That's my market outlook every year. That's my market. It's going to be volatile and it's going to go up over time. And that you shouldn't have any money that you need to access this year in stocks.
Yep.
That's my market outlook. And I could say that every year. And the key though, Cory, again, I liked what you said. You got to know what you own and why you own it. I don't like index funds either. When you buy an index fund, you're owning the good, bad, and the ugly. Yep. And the problem with index funds, Cory, is they've gotten so large that not only do you own the good, bad, and the ugly, but when these other ignorant investors buy and sell, they influence your return. So other people are influencing your return because they are forcing the prices of your assets that you don't even know what you own really, or you own the whole thing. Right. So again, I just don't like commingling your retirement with the foolish emotional behavior of many investors. So again, we like owning the individual stocks, the individual bonds, controlling that, determining when we buy or sell based on price fluctuations, corporate earnings, fundamentals, the stuff that matters.
Yeah, that's good. That's really good, Jake, because I think you are spot on. And I think that when it comes to the markets and it comes to what you're invested in and why you're invested that way and your 401k and everything else, the reality is that people that are investing passively into exchange traded funds, target date funds, whatever it might be in their 401ks, the truth is that over the last 10 or 15 years, we've seen a handful of companies become a much, much more significant weighting in those indexes. In a lot of ways, 401ks, Jake, have been hijacked by passive investing. And for that reason, the way that other people behave can drastically influence your investment performance if you're lumped in and doing what everyone else is doing.
Yeah, which is scary. All right, I brought up tariffs already. Give me your thoughts on tariffs. Do you think it's going to work?
I think let's talk about this. Tariffs. I think that tariffs, in my mind, are effectively an increase in the corporate tax rate, right? It's a way to generate more revenue for the country. For our fiscal situation, it's a way to, but the reality is that's effectively what it is, right? It's a tax on, it's raising the corporate tax effectively on companies that are paying these tariffs. So how it's going to work, I don't know. I think that's, I've got a lot of thoughts around what the ultimate goal or the outcome is, but I don't know. What are your thoughts?
You're right. I think it's just, I was talking to Rachel about this, about tariffs. I was saying, I had a good point. I was saying that it's just, if we raise ours and they raise theirs, aren't we getting to a net neutral in the end? And then who is it really helping? So, and I had a really good lunch with a client. I think it was no. Where did I? The client, we talked about this, but I read. Anyways, here's my thoughts. So I listened. Okay. I saw this on a clip somewhere.
Okay,
and the person made a good point that a lot of the tariff talk and even the DOGE cutting is hyperbole. And yes. I think the goal is to bring attention on some things that are unfair or not right.
Mhm.
However, if the hyperbole gets too strong, people are going to dismiss it. So I think it can be beneficial to grab attention and put some light on some things that are wrong. But if they overdo it, it's going to backfire and not be a productive argument. So I don't agree with the strategy. I think it is a strategy to try to solve some things. I'm not in politics. I'm not an economist. So I think it's a strategy, Corey. Time will tell if it works or not. I don't really care. Like, I just want stability. And I don't think we're going to have that for a couple of years. I talked about the market's always going to be volatile, but when you have any political party that has complete control, you're gonna be less stable. So I want that pendulum to actually swing back a little bit. And I know that I've got to wait 2 years for that. So I think we got to buckle up and you got to stay diversified. And you made a good point. Don't get bearish. Don't call us and say you want to cash all your stocks out because you're worried about tariffs. I mean,
Mm.
you can call that, but hopefully you know what's going to happen. Is our job is going to be to talk you out of that
Right. Yeah, and
because
that's
you could be
yeah, and
making a monumental mistake. And what do you talk about? I think you said this somewhere. Divorcing your financial plan. So when you say that, you're saying I no longer value my financial plan. I don't. That doesn't mean anything to me anymore. So I'm divorcing it.
yep. And yeah, and I would almost challenge that and say if you're that worried about tariffs, then why weren't we having this conversation months ago?
Because that word was never used.
Well,
6 months.
I feel like it was used pretty heavily last year, in an election year, but a lot of people convinced themselves that it wasn't a real thing to worry about.
Yeah, good point,
My
Corey.
opinion.
But also, yes, and another point I want to make is that in your financial plan, we don't have getting bearish or bullish.
Right. Great
We
point.
don't that's not a strategy. It's like, okay, we're gonna get out of the market if this happens. We don't have that in our strategy. In fact, the reality is, Corey, some of the best trading days in the market happen right after extreme down days.
That's right.
And the key is you don't want to miss those bounce backs because that helps influence your long-term return. So
Mhm.
you've got to stay invested. You've got to, again, it's called a risk premium. So again, we're not bearish. We
Yeah,
we
let's yeah.
we say there's always going to be volatility. There's always going to be uncertainty. I wish there'd be less uncertainty, but that's the environment we're in. And I think the market's going to go up over time. And we're going to invest clients' capital in companies that we think are going to do well over time. Maybe not this month, maybe not this year, but hopefully the companies we own will do well over time. Go ahead. What were we going to say?
Yeah, what I was gonna say, Jake, though, is that, there's gonna be volatility, there's gonna be uncertainty, but you know what else there also is there's opportunities to make money because
Yes.
there's markets that exist outside the handful of companies in the S&P 500 in the United States, the handful of companies that have made up this big index that we've talked about. So I also think, Jake, that it is like if you think of investing, if investing means what the S&P 500 does in the United States, there's far more to it than that. So it does not mean the old adage, Jake, is there's always a bull market somewhere, right? There's always
Ah,
something that's going up in value. So the whole approach that we're taking to investing is not just, all right, let's sit idly by and see what happens as far as the market goes. Maybe it'll be good, maybe it'll be bad. This is why we get all the way down to the nitty gritty of the investment management piece that we do and we manage here in house for our clients. So we actually know what we're invested in. We understand what we expect to happen and why that's in the portfolio. And guess what? That may not be impacted the same way that the 500 largest companies in the United States might be. It doesn't mean that you should invest money or you should not because market conditions are good or bad. It is not that simple.
right. Yes. So the key, stay diversified and don't put too much weight on financial press.
That's right.
You need to put maximum weight, all your effort into your financial plan. That's
Yes.
what matters the most. And I'll tell you, if somebody's out there is really nervous about the market, the number one thing you can do, you know what the number one thing you can do is, Corey?
I think I know, but let's hear it.
Maybe we have different thoughts. My opinion is the number one thing you can do is stop spending money.
Mm.
If you are really worried about your investment portfolio going down
Yeah.
and you're retired, Stop pulling from it. Cut your spending. That's the what, and you know what? People don't want to hear that.
No, they don't. No, nobody wants
People
to
don't
hear
want,
that.
but that's the truth.
It's true. I
That's the
agree.
truth, right? If you're working, you shouldn't be worried about it at all. You should just be putting money in your 401k and staying diversified and meeting with your wealth advisor. But if you're working and you're worried about running out of money, you cut your spending, right?
Or retired, you mean? Yeah.
No. If you're working,
Oh, got it. Yes.
if you and Cassie were worried about running out of money, you would cut your spending.
Right. That's right.
So in the retirement, it works the same way.
Yep.
Retirees will say, Jake, I don't have any income. This money's got to last me the rest of my life. I am worried about tariffs.
Okay.
Okay,
Yep.
Mr. Client, stop spending money. That's your answer. Because getting out of the market is not a strategy.
Mm. Yeah, that's right.
Spending is a strategy. How much money you spend is a strategy.
That's right. And it is something that you can control to a pretty significant degree.
Hopefully.
Far more than the markets.
Exactly.
Yep.
Exactly. What you can control in the market, so like you said, Corey, is don't index, be diversified, be disciplined, and don't put money you need in stocks that you need anytime soon, at least, right? Don't put money you need today in stocks. So again, let's talk more though. So we're getting through earnings season, which actually was
Yep.
pretty good. Corporate
Mhm.
earnings were pretty good, broadly speaking. We had a great bump up in January.
Mhm.
February started to get a little bit more volatile, and now we are into March. So again, tariffs is going to be the hot topic. Don't get overly concerned. No one's going to know if it's going to work or not for many, many, many months, if not many, many, many years, Corey.
Yep.
No one's going to know that. Also remember, and I want people to remember this, that geopolitical risk is a real risk, but it's not the only risk in the markets. And good company leadership will adapt and pivot and adjust regardless of the geopolitical risks. So we hope to invest in companies that have good leadership that will pivot based on whatever the rules are, and they will still become profitable. That's what we're trying to do for our clients. So don't get caught up in that. And then here we go. As we go into March, Corey, boom, we'll hit into April and we'll start getting earnings reports again. I don't expect the Fed to lower rates anytime soon.
Mm.
They probably will this year at one point, but that's okay. So again, that's okay. We kind of sit steady with the Fed. So you want to pay attention to what the Fed's doing, what corporate earnings are doing, and understand geopolitical risk. Tariffs have always been a risk. They're always going to be a risk, but we don't really know the impact today. We want to invest in good companies that can pivot. That's really what I wanted to take home on this bearish comment on the market update. Do you have any other market updates besides the psychological piece that you want to point to?
Yeah. One other point I would share that I think is relevant to this discussion is the way that increased tariff revenue in our country, in the United States, that does work like a tax increase. So ultimately, the increased tariff revenue, in all likelihood, is intended to lower how much debt the government has to issue this year because there's more money coming in. Because that is what has sort of led to this position in the first place, right? Is the deficit in our country, how much more money the government has spent than they've actually had coming in. So if this increased revenue allows the government to issue less debt for their spending, not inherently a bad thing to give Congress some flexibility as far as the tax bill and the budget for the year ahead look like. Could be part of the strategy is my point.
Yeah, I think it is part of the strategy. And I don't have confidence that that'll actually play out that way, but we'll
Sure.
see.
But I feel like that gets missed often
Yes.
in all of this and in the existence of the tariffs in the first place. But yes, it is. And I want to point out, Jake, too, that I've done this for 15 years, right, and have stared at markets basically the whole time along the way, and have seen a million different reasons for people to freak out and panic. And I've seen that people do freak out and panic for one reason or another, and virtually every time it's been the wrong move. And virtually every time it's driven by emotion. And even if someone is ready to make some sort of drastic decision in their financial situation, do yourself a favor and make sure that it's founded on logic and not just emotion in the short term, because our emotions can tell us to do some crazy things.
Yeah, and usually the wrong thing. All right, cool,
Yeah.
Corey. It's a good show. We could probably need to talk more about the market because we're already running out of time here. But I do want a quick call to action. Again, please like, share, comment
Yes.
on our content. We're doing this to enhance financial literacy. Cory and I are very active on social media now. You can follow me on Instagram at Jake_Falcon_CRPC, and Cory is Cory Bittner.
Oh, sorry, you
I
got
know
it.
what your handle
It
is.
up for me, Jake.
Cory Bittner KC. I know what it is. But here, real quick, Cory, I got a quick tip.
Yeah,
This is what I
please.
talked about at the beginning of the show. So I read this online, the Wall Street Journal. If there are taxpayers out there who are concerned about someone filing a return falsely on their behalf, you can apply, Cory, for a 6-digit IP PIN.
Mm-hmm.
Now, it's not an easy process, and you ultimately have to give your information to a private company to get certified, which I think is a little weird. But I wanted to share it either way. So go out there, check it out, irs.gov. Look for a 6-digit IP PIN. Basically, you would have to create this PIN to be able to, and then enter the PIN to be able to file your return so somebody can't commit fraud and falsely file under your name. We definitely have some nervous people out there, and I get it. If you've been a victim of identity theft, I'm sure you are nervous about it. So again, check in with your CPA or your accountant if you want to get this PIN. And I thought it was a good article just to share with our audience, Cory. Okay, thoughts on that before we wrap up?
Nope. I'm glad you shared it. I think that taking the protection of your own information and data into your own hands is good. It's important in the world.
Do you have one? Do you have a PIN? I don't.
I think that I do. I think I've got it set up, and I think I actually have it set up for our business too, Jake.
Hey, there we go, Cory.
How about that?
Fantastic. Good job on that one, Cory.
I am all but certain that is the case.
I don't think I have one, but I don't think, I think I'm good. I feel good with my relationship.
You want somebody else to pay your tax liability for you?
That's right. If they want to pay mine, go ahead. Good luck. All right, Cory. Thank you as always for joining me. Thank you all for tuning in, and we hope you have a great week.
Thank you for listening to Upticks. Click the subscribe button to be notified when new episodes become available. Also, be sure to visit our website, falconwealthadvisors.com, and click the Contact Us button if you'd like to meet with Jake and his team.